Hi, Vieira with stockmarketlive.tv. Today we are going to discuss the topic of earnings. As you are aware, we entered earnings season, many companies have reported and many are still going to report. In the basic training course that we have on the website, we have a specific lesson addressing this very important topic, how to play earnings, how to trade stocks going into earnings. The rules are not the same as normally one applies during or outside earnings season. Therefore, a trading course or a basic trading course without addressing the important rules that one has to contemplate by going into earnings, it is completely useless. And those rules are different, I repeat, compared to those rules that you use during that period of time or out of earnings season. So these rules, they are contemplated, described live in our lessons in the basic trading course, which I recorded live when GoPro started trading the IPO since the very first day. And at that time I said that if you invested in the basic trading course, trading or investing in GoPro together with me, you would become a millionaire. Well, today, since IPO, it is already a proven fact that any investor subscribed to the basic trading course and at the same time they have been investing in GoPro with me, they became multi-millionaires. So why I'm repeating or mentioning this? Because I see, or I continue seeing, out there, most investors, they do not have methodology. And that methodology, when they believe that they have one, it fails at some point, since the core components, they have not proven to create consistent profits regardless of stock market conditions. The objective of the investor, it is precisely the same as the objective of a trader, which is to maximize profits, to obtain a profit, consistent profits, regardless of stock market conditions. And that methodology, it is described in the basic trading course, it is today mandatory for almost every single service here at stockmarketlive.tv. So we do not accept or we dislike people that they wish to subscribe to a service without attending the basic trading course. So what we did in our case, since we are professionals, we are not here to sell service, we included the basic trading course in several or in most services, those that they are by far more popular and more important in our service or in our company, giving the opportunity for or all the tools and resources for investors to become successful and to understand and to comprehend what is going on in the markets by attending the live streaming sessions, but also to prepare their own trading, their career, by having the basic trading course. And since I'm also mentioning the basic trading course, in the next couple of days, I'm going to publish one more lesson, a very important one with regards to stock pivots. All right, so those that have been waiting for a considerable period of time for that lesson, it will be available for the next couple of days in your account. You are looking at Amazon as an example. It is the company that I recently addressed completely for free, ahead of earnings. but there are more companies that they are going to report. For example, the case of Chipotle, that today it is trading at $474. The case of Amazon, that currently is trading at $577. And the call I made in Amazon, if you read the blog of the company, the articles, and therefore the full investment process that I've been discussing in Amazon for over than 10 years, that call was made contemplating or according to the rules that you have in the basic trading course, precisely the earnings rules. And if you listen to the call that was made available worldwide for free on Vimeo ahead of earnings, I said the call was made for those that they had long positions in Amazon, as well as for those that they wanted to have a short position in Amazon. Therefore, I was clear saying that if you had a position or not a position in Amazon, you had to sell the stock at $628 an ounce and thereafter reversing to the short side. And I explained this, my call in Amazon, regardless of the outcome, it was current with the article and my most recent call in Amazon in December 2015, when I said on a long-term basis you are going to sell here Amazon at $689 and you are going to start selling short the stock. Okay, so then the share price fell within a couple of weeks, 3 weeks, $150 per share before bouncing ahead of earnings. So I knew very well what I was doing, all right? Contemplating the risk ahead of earnings, what we had to do in order to maximize profits, regardless, I repeat, of stock market conditions. For example, other company that is going to report soon, it is Chipotle, okay? So for subscribers to the service, any service basically, we already made that call, my colleague in fact, he wrote an article saying this is my call in Chipotle regardless of what the company is going to report, right? So that call was made available in real time, the content, what investors they had to do. So regardless of what Chipotle is going to announce, the call was already made, since he considered that the call is called to be or to correspond to the less or to the minimum risk and eventually to the maximum profit, okay? So in the case of, for example, in the case of Chipotle, the call, I think it was available, or it has been available for, I don't know, 3 weeks. You have it on the website. In real time, there is an article for subscribers, just have to log into your account and to read the content, all right? In the case of Amazon, as well as in other situations, we made the calls always in real time, okay? We never make calls without being in real time, unlike everyone else, or after the fact. For example, in the case of Amazon, it was made available 1 hour and a half ahead of earnings. In the case of Chipotle, for example, small investors, it was already made available, I think, 3 weeks ago. I repeat, you have the date on the article. But the calls, earnings calls, for example, to professionals, hedge funds, they might differ from the calls to small investors. And this with regards to what we consider the stock or the investment strategy or direction of investment on the mid to long term. How do you know about the direction of investment on the mid to long term or on the short term? Well, the answer to that question is related to my lesson that is precisely stock pivots. Okay? Moreover, stock pivots, there are plenty of websites on the web addressing the topic of stock pivots where you can consult. However, it is completely, those websites, the content not only it is useless, as extremely dangerous. Why is it extremely dangerous, the content of those websites, or when to make a decision based on the content available on those websites, which information it is in most cases free? Because those websites, they do not create any history whatsoever with regards to how to invest in these companies. The difference between our stock pivots and everyone else, and when I say everyone else, I'm not excluding any market participant. I'm mentioning everyone else. Right? Our work, it is 100% different from everyone else. We create the stock pivots. We create the history in these stocks. And we announce it live. We record when we should sell, when we should buy, when we should reduce a position, or we should increase the position, as an example. And this is according to a very complex investment process. In most cases that we have been addressing in these companies, more than 500 since IPO. And therefore, for example, one of the key components of earnings rules, how to play earnings season, it is directly related to what an investor has been doing in the past. This to say what? For example, a couple of years ago, I remember a story of a hedge fund manager that he contacted us saying, I would like to subscribe to the service to play earnings, right? To know what the companies are going to report. And we found that very strange, to say the minimum. We do not accept gamblers in the service, okay? No one subscribes to a service other than a gambler to know what the company is going to report, right? Our trading or investment, it is completely independent of what a company is going to report. We don't have inside information. Our calls are, I repeat, made regardless of what a company is going to report. The risk is contemplated ahead of earnings report. There is a clear definition of the risk, a clear definition of the potential profit. There is an investment plan, and all the answers to these questions, they are addressed and responded to investors. For example, with regards to Amazon, Amazon has just reported one more earnings, but Amazon has been reporting every single quarter. So even for those that they don't, for example, they have very small accounts, there is a service that we created last year in 2015 called Live Market Standard, where you had for free earnings call in Amazon, 100% accurate. But not only you had the call itself, how to play it, as well as you had the reasoning behind the investment process or the position that you should have going into earnings. In that case, in 2015, I'm referring to long positions in Amazon during the course of 2015. But you had the reasoning, all right? As well as in the reasoning, you have an explanation of the risk involved and what we were going to do and why we were going to do it, right? So that is the value, I would say, of how to trade or to have a position going into earnings into a given company. This is very important. So we explain everything, every detail. It is explained, and thereafter it is up to the investor to decide whether he should have a position through earnings or not. Okay? Rather simple. We are not going there to pull the trigger for you. Okay? Rather simple. As an example, assuming that you had considerable long position or large position in Amazon in this earnings announcement, you already had, and today you have a considerable open loss, or at least you gave back important profits. And you gave back important profits, why? not because of this earnings report, where Amazon reported. That is not the case, all right? Today you have Amazon at 577. Ahead of earnings, you had Amazon at 635. So it's not because of these earnings. Most people, they will believe that it's because of these earnings. No, it is not because of these earnings. You gave back very important or large profits. I'm not referring to losers or the Americans that they have 10 shares or 50 shares in Amazon or 1 share. That is for idiots. I'm referring to those that they didn't sell long positions in Amazon at $689, reversing to the short side. Not only you missed or you gave back all the profits or important percentage of profits in Amazon, as well as you missed a very large profit on the short side. So you missed the very large profit on the short side within 2-3 weeks, 689, 694 to less than $550, as well as then you missed the earnings call on the short side, 630 plus, down to after hours at least 550 so far, all right? So this is very important. So these people, they often make a question which is, do I make more as an investor or a trader? Well, that is a very good question, and the answer to that question is depends on which period of the market you are, okay? And the direction of investment. So in Amazon, today, for example, today, when I say today, I'm referring to the last 7 years or more, despite the fact that Amazon, the share price fell considerable, you still have an uptrend, a long-term uptrend, correct? But there are many other stocks in the past couple of years. The trend, it has been a clear downtrend, all right? So it depends which stock you are talking about, it depends the trend in place, as well as the market conditions. And again, we are there to answer to these questions to investors, right? So we address these topics, and these topics are addressed as well as, for example, the stock pivots. We address them on live streaming sessions as of today. So, for example, every day we announce this is the expected price on the upside in Amazon for the day, and this is the expected price on Amazon on the downside for the day. And we try to explain it, why, all right? Why is this happening, as well as which is the direction of investment, all right? Whether it is the long side or the short side, all right? For people to understand. Moreover, also the answer to these questions, more than the live streaming, which happens daily in real time, investors, they also have stock forecast and earnings call. And those stock forecast and earnings call, which are always made available live in real time ahead of important events. That is to say, everyone else discusses, for example, when you visit websites in the US, be it CNN or CNBC or the Motley Fool or whatever, they all address and they write about Amazon after the fact. That is, you have Amazon earnings, the company reported, and they report earnings. So everyone reports, and what changes? The title of the article, right? Nothing else. And sometimes in the content you find opinion from Mr. A or B or C, from working for a company X, Y, or Z, and that opinion, in most cases, 99% of the cases, it is an opinion which is based, right? It is not an independent opinion. The person behind it, it is trying to sell an idea, all right? The person often does not have a position in the company, so it does not have his money where his mouth is, but often it happens that the company behind it, it has a position. And in most cases, these articles, including the interviews on the television, they are paid. And most people, they are not aware of this. It's propaganda, marketing, okay? Completely. And therefore, advertisement. Advertisement, since when you play a video, you start seeing advertisement before you play the video. Moreover, these companies, they not only make money out of this advertisement, the advertisement that is published on the website, ads, as well as videos, as well as ads on the videos, as well as the money, that is a lot of money, that goes behind, all right? Behind the curtain. That's what we refer here in most cases. We are in the financial markets. We are not in a business of potatoes. So, friends, in every business where a lot of money is involved, it is expected, since I don't trust anyone, that is something that I learned a long time ago, it is expected that a lot of scams, they exist, a lot of games. If you don't like or dislike the word scams, you have the word games. In my case, I use the word scams, since in most cases, in fact, there is illegal activity, share price manipulation, information ahead of earnings, inside information that is published and it is available. And I know it because I can see it on the tape. So my number one rule, or one of my rules with regards to how to play earnings in the companies, it is known, it is published, since I've been publishing, I don't know, hundreds or thousands of videos for a long, long period of time. You should not ever attend a conference call. I never listened to a conference call in my life, all right? For example, the case of Amazon, that was the most recent earnings call. I don't care what the CEO or the financial CEO or what the company is going to say, all right? It does not matter what they are going to say. The share price does not depend on what they are going to say, okay? Most people, they attend a conference call looking for arguments that sustain their own beliefs. If they listen to something that they interpret as positive, they are happy. If they see or listen to something that might seem contrarian to their point of view or their belief or their position, they might see it as negative, and therefore the sentiment can actually change. But the sentiment does not change because investors, they listen to a conference call. And the proof of it is very simple. Before the conference call, share price is already moving. Right? It has already been decided once the company reports, there is immediately a very high volatility. And it has been decided which is going to be the course or direction of the price, be it Amazon or any other company, all right? So when, for example, this to explain that, I don't know, the recent case of Apple, that share price fell, many people, they were discontent with probably the Apple conference call, what Tim Cook had to say with regards to the future of his own company. Well, I didn't listen to the conference call, but I don't believe that Tim Cook said something negative, all right? So, again, probably, if you visit websites in the US, where most scams are located, you will see that investors, they were very unpleased with the Tim Cook comments, including, and I'm referring to 98% of the population, represented by CNBC, Jim Cramer, writing immediately about it, or reporting, Okay? With regards to Amazon, the story is the same. Every time an investor has a loss, automatically is going to look for arguments to justify his losses. And one of the truths in the markets for investors is that people, they always, I have to go because of trading, people always, they never wish to assume responsibility. This is something that is very serious and typical of gamblers. All right? This is typical of gamblers and typical of the human being. While you are unable to assume responsibility for your own decisions, what people they do is to blame someone else. For example, on my Twitter channel, I already had replies, since I often criticize Jim Cramer, giving examples of trades or situations where you could obtain a very large profit by assuming a contrarian position. It often happens that I receive a reply saying, yes, you are right, Jim Cramer is, the devil on earth and blah, blah. Well, Jim Cramer makes his role, okay? I don't have anything against Jim Cramer. I think that he should be in jail, but he's there on CNBC, he's receiving a wonderful salary, and his bonus are increasing every day, every week, and every month. And the reason why his bonus and salary and he continues there on TV is not because it's fun to listen to or to watch, all right? He's doing his job properly, all right? He has an agenda, rules, commandments, like in the Bible, and he has to follow those rules if he wants to get his salary by the end of the month. The responsibility for him to be there is those that they plug or turn on TV and they watch him, regardless of whether he's fun or not fun. So it's not a question of disliking Jim Cramer, those that they reply to my tweets, saying that yes, you are right. But the question is, I don't want to listen that yes, I'm right, because my friends have been right since the very beginning. That I'm right, I already know. Or that I'm good in what I do. Okay, that I already know since the very beginning, my friends. That is not going to change. What I would like to see, that's what I say to subscribers, is if you know that something is going to happen, and therefore if you dislike him, why then you don't assume a position against what he's saying that he's recommending to Americans? The example of Umbrella or GoPro, right? For example, the case of Amazon, what did Jim Cramer said with regards to this earnings season in Amazon? I will not bet against Amazon. Well, normally, that is normal, since Amazon every quarter, after they announce it, Amazon share price, even if when decayed, recovered quite well to make new highs. So his goal was logical. I'm not going to bet against Amazon. Well, any monkey in the world, any stupid Donald, it would say or have said the same. The difference is that someone with a brain probably would have a different opinion. Well, having said this, like I said before, you had the historical opportunity, and I'm not referring to Amazon. There are plenty of by far better opportunities compared to Amazon, and including for short sellers. In the cases of Shake Shack, where you had the stock at $90 plus, historical opportunity for you to become a millionaire, where precisely Jim Cramer said Shake Shack is the Tesla Motors of burgers, and so these shares, they are not going to crash, ever. Well, they crashed. Or when Jim Cramer said GoPro is a bargain at $65, well, bargain or not, share price, they are now near single digits. Or Umbrella, the same. buy umbrella at $85.89, and today you have umbrella, I think, at $37 or so. These are clear examples, all right? And so, by far better, in fact, that Amazon, do you understand? We are talking about different companies, okay? Different business models, different management, because Amazon had always a very high quality management compared, for example, with GoPro. GoPro, my friend, management, you are not going to compare GoPro management with Amazon, or El Pollo Loco management with Amazon, or I don't know, there are so many examples, or Acadia Pharmaceuticals management with Amazon or Apple, okay? So the management of a company, to know the management of a company, for example, I'm going to refer to this case that why not to listen to a conference call? Can you believe, can you imagine Warren Buffett or George Soros on the phone or on the web with earphones listening to what those guys had to say on earnings? It is completely ridiculous, right? And I suppose that today you believe that George Soros or Warren Buffett, they have great results, they are great investors. So, is there any need to be listening to a conference call? For most people, probably you have time. I don't have time. Moreover, to listen to a conference call, like I said before, it is useless. It is only good for those that they have websites there in the US publishing all this crap, including this CNBC and blah, blah. But this is to generate or to create traffic on their websites. People, they are going there, but like people, they were buying Amazon at 630 plus ahead of earnings. People, they go there to their websites to see, company reported earnings, what are the earnings? It's useless. It is completely useless because the price, what the company is going to, the price is not going to depend on what the company is going to say. There are many examples of companies that report a good quarter and share price, instead of going up, goes down. So, you understand what I mean? And vice versa. It's not directly related to what the company has to say. Moreover, it is also a fact, and you find it in plenty of examples, that the title of these articles, including the content, it is manipulated. There are many situations where a company reports earnings, they missed earnings, but the title is, Company X beat earnings by a wide margin, sales, blah, blah, and they use the metric that they want to use to create the fantasy or the illusion that the company, instead of missing, in fact, surprised. And you might ask, why is this happening? Because they are paid. These companies, they have to, journalists, they have a salary and they have to be paid. Journalists, they are not paid to report the truth because they have no idea what the truth is. So there are many situations where your company reports and you have articles that they seem or they appear to be incoherent or inconsistent. One, it says one thing, the other, it says other thing. And people, when they look at this information, they often get confused. That is precisely the objective of these journalists and these websites, to create confusion. Has the company missed or has the company bid? So am I going to buy or am I going to sell? This is the objective, to create this, mass, sorry the word. This is paid marketing. All these articles, all these, that is happening around the financial markets, including stock ratings, ahead of earnings, raising targets. It is paid marketing, all this, because it is a form of influencing the investor that he already has or not, or does not have a position, to buy, for example, more. So many companies, they have a position in a certain company, ahead of earnings, without the news, without knowing what the company is going to report. For example, they believe that it's going to surprise, and so they raise targets. I think that is incoherent, because either you have inside information or you are gambling. In our case, it is rather different, not because we have the inside information, because we don't, but the truth or the goals, they are made as a result of what we know or what we see on the tape. That is a completely different advantage, where the advantage is, right? And since there are not investors in the world, although many they say they can read the tape, they can't, including the major and the biggest and largest financial firms in the world. It happens, and this is other common belief among investors, that in fact what happens among investors, in general speaking, most of them, they are gambling in the markets, as well as when you enter a casino, the great majority are gamblers. You have a very high probability to lose money. In financial markets, is precisely the same. Unless you know the tools, the resources, that allows you one to have a unique competitive advantage. And bear in mind that competitive advantage is not the entry price, but instead exit price, okay? Exit price is by far more important than the entry price. Well, and with this I terminate, because I have to go, since we are during market hours, I have other people to attend, as well as our own trading, all right? So don't forget, couple of days you are going to have the lesson on stock pivots, and I hope that at least what I said today, it will be helpful to you with regards to earnings, okay? Just, you don't need in fact earnings to be, or to make money, or to be consistently profitable in the market. Most people, they like earnings. For example, I make, most of the calls I made on earnings, they are 100% correct. They are accurate. But I always dislike earnings. Why? For a simple reason, everything that includes or introduces one more variable, it is always a disadvantage and not an advantage. So, even in my case, that I address earnings with a very high level of accuracy, I dislike earnings because it always introduces, no matter what, it's a mathematical fact, a level of uncertainty. Okay? So, therefore, or consequently, it should be normal to expect an investor to, not necessarily to dislike, but at least to be more careful with regards to earnings season. But it happens precisely the opposite, as that story that I told you about the hedge fund manager, that he wanted to subscribe to service to play earnings. It does not make sense. This is a gambler, and a gambler does not have a place in a serious company, and much less in the markets, since it is a question of time until you blow up entirely your capital. And just to finalize, be very aware or very careful, if you consider that you are not a professional in the sense that you don't want to learn how to invest in the markets, to who you are going to give your money back to manage your portfolio. Since today, for example, many people, they go to banks and they give their money to banks to manage their portfolio. And those banks, they are not managing anything. The banks are just middlemen. The bank itself, as well as today, in fact, the role of a hedge fund manager in many cases, they are middlemen. What they are going to do is to ask to someone else what to do, or they are going to hire, or to pay a commission to other party, to for them to manage your money. And in the end, you don't have any idea, any clue how your money is going to disappear. But, you know, and so it happens like this case of Bill Ackman and so, that they publish and they have nice websites, a lot of marketing conference calls, propagandas in hotels and blah, blah. Those folders, brochures and blah, blah, with blah, blah, blah. But the content is useless. There is nothing. There is no track record, there is no credibility, there is nothing. And moreover, if you, as I will do, study carefully or investigate, better saying, the past of these individuals, most of them I'm not referring to Warren Buffett or George Soros that he didn't have anything. I'm referring to the rest, that they, you know, they made money not trading their own accounts, but they were given money to blow up. That is a completely different matter. And in most cases they appear there because they were put there, all right? And also their parents, they had money, and so they didn't create anything. And therefore, in these cases, I find amazing how people get surprised, how then they, you know, one day they receive a statement saying, your account is gone, or they give a call to the fund manager and say, I want to take my money back. You know, and last year there was an example. You remember the case of MA Global that I addressed here, disappeared, right? And, you know, everyone or most people were saying, well, no, it's not going to disappear, no, blah, blah, blah. It went down to zero, disappeared. So that call, MF Global, it was made here at stockmarketlive.tv. Bear in mind, we were the only company in the world making that call. I made that call that MF Global is going to disappear. And so I have the credibility to say that, because not only the credibility as well as the facts, since the facts are known, more than 30 years ago, there are reports in the United States made by authorities that most people, they lose money in the markets. And people, they continue going to the banks, opening accounts, and hedge funds, blah, 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 and to give their money to blow up. And I think, and I repeat, and I will continue repeating, that I think, and I'm 100% sure, that you fully deserve to lose your money, since, like I said before, you don't want or you don't wish to assume responsibility. So when the people, they say, we are professionals and we are here to help you to manage your blah, 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 as financial advisors, that connotation or that stamp, financial advisor, is one of the greatest scams that I've ever listened in this industry. Since it is a proven fact, all right, that you don't learn how to invest in the markets going into university or reading books or anything else other than do it yourself. And so these individuals that they call themselves financial advisors, that they have master degrees and so on, the question is, where is the track record? What have you been doing in the past 20 years, right? Show me the calls that you made. Show me what you created, okay? And they don't have nothing to show. So what do they have to do in these cases? They have to work for someone. And that someone is a company. So they receive a salary, that someone is a company. And the company, what they are going to do is to sell the name of the company. Is the brand. And so people then, they are buying the brand, but not the record or the person. You are paid a nice lunch or a hotel, or in some cases even better, depends. And people, they believe, and they put there, they lose the money, and I'm very happy.